Welcome everyone to the CFO Swinger Watch newsletter technical analysis video for the week of September 25th through 29th. We have a lot to talk about, so let's get right into it. So, SPY last week. Heavy volume of selling with a very high velocity move to the downside. That's a very quick summary of what occurred last week. Now, I want to take a look at this specific area on the Thursday candlestick. So last Thursday, we created this gap down and we completely ignored it. Now, there are two scenarios that I think can occur in the next couple of weeks, including this week. Now, before I say anything else, you guys have to remember that compared to August and September, because again, we tend to have one of the worst performing months in the entirety of the third quarter or quarter three, and September tends to be the worst compared to August, because if you guys remember, this was August, right? And we bottomed out right at 433.01. So with September, if we are assuming that September is going to be worse than August, then we can expect the last week, so this week of September, to be one of the most volatile and one of the most worst performing weeks out of this entire month. So it's going to be a lot worse than last week. Now, based on that premise, okay, there's most definitely going to be volatility. And I'm going to assume that based on that volatility for the last week of September, we're going to see some very wide price ranges every single trading day. So based on that entire premise now, I have two scenarios. So number one, we are going to come back down to retest 429.50. So last Friday, we got that nice retest at 430, that whole number level. And last week's lows was at 429.99. It was 1 cent off from hitting that actual 430.00 level. It actually undercut that and went slightly below it. Now, you guys also have to acknowledge that we are below August lows as well. So that's not looking good. Now, I want to talk about this 429.50 level. So this was a previous resistance level that was created when we made this micro bull flag back in early June. And part of that bull flag, the actual flagpole, was created thanks to this large gap up that we also completely ignored and we did not fill. So we have to believe that the bulls, if any of them are surviving still, are going to defend this level strongly. And this is going to be their kind of like their last line of defense before we see a larger second leg move to the downside. So 429.50 has to be on your guys' respective charts as well on the S&P 500. And if we do come back down, probably tomorrow, I'm going to expect a nice large pivot away from this 429.50 previous resistance level, turning it into a new support level. Now, if we include the volatility that is supposed to come for this last week of September, then we can see a retest of 437. That's right. This level is right in between this gap down that we created last Wednesday and last Thursday. And also 437 was a level of support, major support back here and back over here as well. So if we do come back up to 437, that means we're going to fill in about 25 to 50% of this gap down, reject that 437, and then start moving back down once more. Now, that is if and only if we see that price volatility plus that continued bearishness in the overall market. All right. Now, the second scenario is that we just simply retest 429.50, kind of consolidate. And what I mean by that is that we can sort of do this. So let me get my brush here, right? And we can get tighter and tighter and tighter until we form some sort of a bear flag that also aligns with this descending support trend line. And as this occurs, okay, we can also go like this too as well. We can see another break below 429.50, so we don't hold it. And then we're going to see a second break below 426, and then that's when things go pretty crazy. There's going to be extreme amount of fear, and we can see that fear turning into just absolute overshoot and overreaction by the market, and that will allow us to fill in this gap back in early June. And so if you truly overshoot, we can end up going all the way back down to that psychological kind of a funny number at 420. But if I want to be a little bit more realistic, I expect the price to fill in the gap and then bounce somewhere around 422.50. Right, that is the realistic situation. So in this second scenario, if September does not the last week of September here does not give us any type of large volatility, and we get something like this where we consolidate and create a nice bear flag with last week's price action acting as the flagpole for that bear flag, we can definitely break below this descending support trend line and 429.50 and 426. And again, 426 was also a level of major support back when we are forming this micro bull flag. So expect some sort of resistance from the bulls as well. But again, if the fear kicks in, we're not going to see a lot of support at 426 either. And we can continue to move to the downside until the sellers are satisfied with the fact that we have filled in this gap up that we never filled in back in early June. Okay, so right now, again, the price is kind of in a no man's land. It's stuck between 429.50 or specifically 430, since last week's lows was exactly 429.99, exactly 1 cent below 430. So the market kind of overshot below 430 and undercut it. But that 430 level is going to be important. So right now, for sure, if we do have volatility, okay, that first scenario as I described a couple minutes ago, we can see a complete wide ranged trading days, okay, with the price, and we can see 429.50 or 430 acting as the weekly support, and then 437 acting as the weekly resistance or high. All right, so with that in mind, let's take a look at our first name. So Walmart, okay, so this one is looking quite weak. First of all, we have a rising wedge. And based on the volume that we saw the past few trading days here, okay, it seems like a huge amount of large sells have hit this stock, especially on this day 2 weeks ago. Okay, so last Friday, and after this occurred, well, we have come right back down to the lower range of this this rising wedge or this ascending support trend line. And last Friday, we ended up not being able to uphold the highs of last Friday and trying to at least attempt to bounce this back up so that we can do something like this, right? And this is exactly what we've been doing, right? We've been completely just respecting the parameters set up by these two ascending trend lines, which obviously create that rising wedge chart pattern. So if the markets continue to stay weak, I expect this one to break below my 21 momentum SMA, or simply below 162 since the 21 SMA last Friday ended up at 162.20. So it closed right at that number. So as long as we break below and stay below the daily 21 SMA, we can see some more selling coming in, and ultimately this rising wedge can finally give us that bearish breakout to the downside. Now, I would say my rough range of some price targets will be somewhere around 159 to 160.50. So this was a previous level of resistance and support, as it was with this level as well, with 159. But the only reason why I'm saying between 159 and 160.50 is that, well, we have our daily 50 SMA as well. That's kind of creeping behind the price as well. So this one can be a very, very quick day trade if we, just see an absolute crush tomorrow on Monday, back to the downside, and we see that breakout below this ascending support trend line, and we can see even profit taking once we can see that retest of the daily 50 SMA. But that will also mean we would have to break below 160.50 as well. So make sure you guys remember that. So with Walmart, as long as we see continued selling and continued high volume of selling, excuse me, guys, we can see the maximum profit target range hitting at 159. But again, that means we need to break below the daily 50 SMA. And so far, Walmart has been really holding this daily 50 SMA, even if we have overshot below it. So who knows? Maybe we overshot below the daily 50 SMA again, and then we get that retest at 159, and we immediately snap back up in the next couple of trading days. Okay, so that's kind of the scenario that you guys should have for Walmart. But for now, for sure, Walmart looks pretty bearish with this overall rising wedge chart pattern, plus the fact that we've been getting an increased amount of selling and this unusual day of selling as well last Friday. Okay, so that's what you guys should be looking for Walmart. Right, our second name here is DUOL, Duolingo. So you guys should know that, well, if you guys are frequent on social media apps, Duolingo, and it's their mascot has been pretty prevalent kind of everywhere on social media, Instagram, on YouTube, TikTok, and stuff like that. So, Duolingo is also a pretty easy app to use too for learning different languages. But Duolingo, this is one of the few charts that I am keeping my eye on. So this one has been a good leader for this entire year. Now, what's caught my eye is that last week, instead of breaking below the daily 50 SMA, we bounced. So that is the complete opposite of what I would expect to see as a leader, because again, as I explained last week in the Discord, I've been telling you guys that the leaders, like the big tech names and just the overall leaders in individual sectors, have been absolutely smashed back to the downside. All right, they've been breaking their uptrends, their higher highs and higher lows, and they completely smashed that by breaking to the downside with high velocity and with a lot of selling volume as well. So it really surprised me that Duolingo was able to kind of ward off the selling and absolutely hold over the daily 50 SMA with some great relative strength. And in fact, it was able to close right back over the daily 21 SMA as well. And on last Friday, we confirmed that on Thursday's close over the daily 21 SMA by closing over the daily 21 SMA on Friday. Now, I have to warn you guys, obviously, last Friday's candlestick was not the best. It is an inverted hammer candlestick. It's very bearish. So there is a chance that we can just break below the 21 SMA again, and this might have just been just day-to-day trading volatility. But I do not want to dismiss the fact that this one has been having some great relative strength. It's been really just navigating most of September pretty well, right? Even at the beginning of September here. So if you take a look at this candlestick right here, right? So we've been really just going higher and higher and higher with higher highs, higher lows, staying right over the daily 10 SMA. And that's just a typical textbook uptrend. So obviously, with the market correction accelerating, this leader has had to follow the market as well last week. But even then, again, this one has been showing such great relative strength compared to last week. I mean, just compared to SPY overall, right? So definitely keep your eyes on it. And this week, if you do see a move back down, because the fact that we have an inverted hammer candlestick from last Friday, we can break below the daily 21, okay, right around here, and then we can come back down to retest 150. So that's the reason why I gave you guys this entry point, this early entry point, long bounce at 150.20, or if we decide to hold over the daily 21 SMA again for the third time, that means we can try an entry at that bounce at the daily 21 SMA and possibly come back up over to at least retest the daily 10 SMA, because right now the price is stuck in between my momentum SMAs, the 10 and the 21. Right, so it was stuck in between these two SMAs for the past 2 trading days, right? Thursday and Friday of last week. So I would say if we get an entry point around, at least the 21 SMA, and as seen by last week's closing price at the 21 SMA, which is around 152.35, we can possibly get an entry somewhere around there and just take profits once we see an actual retest of the daily 10 SMA, which I would assume that it's going to be somewhere around 157 to 158.50. Okay, and that's if and only if we see a large bounce at the daily 21 SMA and we continue to move up higher to try to show us that the price wants to retest the 10 SMA. Okay, so as long as this 10 SMA continues to curl to the downside, we should be seeing a retest of that 10 SMA somewhere around 157 to around 158. All right. Now, one last thing for this name. So I gave you guys an entry point around 167 as well. So this one's kind of a long shot. The reason why I say that is that, well, since the markets are so weak, and if Duolingo here, DUOL, decides to follow with the market and move more to the downside and it fails the daily 21 SMA and the daily 50 SMA, so both the 21 and the 50, then there's a chance that we can come all the way back down and hit some sort of a large support level, so somewhere around at least 136, pivot off of it and come right back up and continue to consolidate. So if we continue to consolidate for the next couple of weeks, even months, I'm going to expect at some point the price to come back up to retest this currently forming descending resistance trend line. And so far, we've had 1 and 2 retests and or visits at this descending resistance trend line. So this is kind of my just guesstimation of when the price can break out over this descending resistance trend line. But based on the trajectory of this trend line, we should be seeing some sort of a breakout around here, which should be around 167. Okay, so that's kind of my long shot number. But again, just make sure you guys keep that in mind. This long entry. But so far for this week, you guys should just be focusing on the daily 21 SMA and the 150 support level as well. All right. So last but not least, we have X. So I'm so glad that last week we traded this one 2 times. And this one has been just an absolute banger of last week. And again, just like with DUOL, this one has incredible relative strength. And again, this one has been having great relative strength specifically only because of the fact that we have, um, well, bids, actual bids on this company to be acquired. So again, I've been telling you guys that the M&A season can be really kicking in into the end of this year and into next year as well, maybe all of next year. So hopefully, I am expecting US Steel X to be bought out very, very soon before the year ends. But as long as we continue to create this absolutely awesome bull flag, right? We have this ascending support trend line as well, with the fact that we have this very, very large, um, uh, you know, uh, flagpole. And this is obviously due to the fact that we had that announcement with Cleveland Cliffs, and it was our first kind of announcement ever um, recently about this company looking to get acquired or looking to sell its business. So, and a fun fact, US Steel has been in the past couple of decades has been constantly bought out and then comes right back as a company again and it IPOs again. So that's happened multiple times in the past. But this one is very, very interesting to watch because, well, it's had a history of large volatility. I mean, its all-time high was 196. So, so it seems like it's obviously way far away from the all-time high price. And again, I don't think this acquisition is going to provide us with that all-time high price, and valuations have changed the past, well, like over 10 years. So, for this one, definitely, continue to hold it since we did get an entry last week. A second entry actually last week was our second trade in the same week. So with US Steel, if you guys aren't in, try to get an entry point over 32. So at least if you guys want to put it simply, over the previous high today. So last Friday's highs was 32.06. So we can get a nice entry point around 32.10. And if you guys just want to wait, right, and if you guys get lucky before there's an actual acquisition, you can get a nice confirmed breakout entry over 32.50. All right, so again, this is kind of a gamble because again, we don't know if US Steel decides to completely shut out all the bids that they currently have, and that will absolutely plummet the stock overnight. But we want to stay positive since there are a lot more bids coming in now, actual official bids from other companies, as we saw last week. I believe the company is called, let's see, Stelco Prospects. Okay, so they're tossing their bid into the hat. So this one should be very, very interesting. All right, so let's go over to crypto. So crypto, nothing much to look at. Really, just again, crypto has been ranging so far. I mean, it's been really trying to hold this 25,300 level for the past 2 months, including this month. So as long as we continue to stay away from this $25,300 level, since we've hit it at least 3 times here, okay, we can come right back up over to around at least I would say this level is around 28,850. Okay, so this is the level that we are looking at in the past as well. And so far, we've been making higher highs and higher lows. Right, we've been following this price path right here that I've drawn. Very, very ugly price path that I've drawn here, but you guys can get the picture. So as long as we continue to make this double bottom on Bitcoin, okay, we should be good, right? And so far we've been seeing this divergence as well that I've been constantly mentioning in the newsletter. So hopefully you guys have been reading that. But there is this divergence that is kind of coming out now with Bitcoin, or kind of the overall crypto markets compared to the equity markets as well. Right? Okay, so that is it for this week's names. So make sure you guys put on your alarms or alerts. I guess alerts makes more sense than alarms, but same thing. They're both synonymous. So Walmart, DUOL, and X. Okay, so Walmart, Duolingo, and US Steel. Make sure you guys have your alerts on. And in my personal opinion, I think US Steel and Walmart are going to be the trades of this week. So Walmart for a short and US Steel for a long. All right, have a great rest of your night, and I'll see you guys tomorrow morning.